Okay, good afternoon, everyone, and thank you for joining us. My name is Mike Mandelos, and I'm the Director of National Accounts here at Miller Howard Investments. And today we're kicking off our first attempt at a Zoom meeting here where we're going to discuss our Q1 of 2020 Midstream Energy Metrics. I'm going to be joined today by my colleague. You can see him on screen, you can see him here, John Cusick, who is one of the lead portfolio managers on the Miller Howard MLP strategy. So, John, how are you doing today?
Doing well, Mike. Thanks.
Okay, good. And you're loud and clear, so that's a good thing. So let's kick right off. And the Midstream Energy Metrics is a really popular piece that we put together every quarter. I use it a lot with home offices, and our wholesalers use it a lot with financial advisors. But for those financial advisors who are joining us today who may not be as familiar with the tool or the publication, can you just tell us a little bit about what they are and kind of what your goals are for you and the PMs when you're putting together this MLP metrics piece?
Yeah, sure. We started MLP Metrics, now called Midstream Energy Metrics, about 5 years ago. And our goal was to recap the last earnings season and to provide investors and our partners with commentary that summarizes the key themes and findings for the midstream sector, and specifically the individual companies that we invest in. In addition, we published several charts to show quarterly financials such as Ebitda and the distributions, and also the financial strength of the midstream companies that we hold throughout our portfolios.
Great. So this quarter, we highlighted that we're moving, or you made a slight change where you're focusing a little bit more on free cash flow as opposed to what you had been looking at, which was distributable cash flow. Can you talk a little bit about why you made that change and kind of why that was important for you guys?
Sure, yeah. In the past, we used distributable cash flow and DCF coverage to evaluate the midstream companies' distributions and distribution coverage. But moving forward, we're really going to focus on free cash flow and free cash flow coverage. We believe free cash flow offers better insight into the safety of the distributions, and it's more comparable for companies across the industry and across the broader market. DCF relies on the concept of maintenance capital, which is really a midstream-specific measure. Total capital spending, however, is generally well known as companies disclose their budgets at the beginning of the year, and then generally you can forecast across future years, unlike maintenance capital, which is defined by each company and typically only includes capital required to maintain the physical integrity of the assets. In addition, the industry overall has moderating growth, and more of our investments in our MLP strategy are in C Corps. It is easier to compare free cash flow across industries, while it is impossible to do so with DCF. So those are the reasons that we decided to make that change.
Okay, perfect. So this quarter was certainly different than most quarters that any of us have seen in our lifetimes with COVID-19, and then there were a number of things going on with energy, and the whole world was very volatile. As you and the other PMs were listening to the earnings calls from our midstream companies that we're invested in, were there any kind of common themes that you heard across the different calls from the different management teams?
There were a lot of interesting data points this earnings season. As you said, it was something that we've really never been through before. I think there were a few things that did stand out for us. One, the decline in demand for commodities caused by lower economic activity due to the virus is a significant challenge for the industry currently, and really specifically around the uncertainty for the scale and duration of the impact, and also the timing and the extent of the recovery and how all that is going to play out. It's made it very difficult for the companies to forecast what is going to happen over the next several quarters. And then two, the other trend that we would really point out, or the theme, is that midstream companies that we hold have announced significant capital spending reductions during the quarter, reaching into the billions in response to slowing demand and the timing of the economic recovery. But as investors, this flexibility is what we want to see from the companies while they navigate this downturn.
Great, thank you. So one of the goals of this MLP metrics piece is to show that the companies that we invest in are exhibiting financial strength. Is there a particular chart that you would want to highlight with financial advisors that would, kind of help them explain that story to their clients?
Yeah, I would say probably portfolio metrics, which is the first chart on page 3 of the publication, really has some good data relating to the company's quarterly performance, specifically Ebitda and distribution growth. We would point out that second quarter 2020 Ebitda, which will be reported in late July, beginning of August, will likely decline year over year, and probably pretty significantly due to the current economic situation. And most management teams are really guiding for a pretty tough quarter for the second quarter. However, if economic activity picks up in the second half of this year, as many are predicting, we believe second quarter 2020 could be the low point for Ebitda during the year.
Got it. Okay. So now with these MLP companies or pipeline companies, we tend to focus a lot on volumes, but we'd be remiss if we didn't bring up the price of oil and supply and demand. So because I think that's what a lot of investors typically tend to think about. So what are you seeing out there with regard to supply and demand for the underlying commodities that are passing through these pipelines?
Yeah, I mean, what we've really seen over the last couple of weeks specifically is that crude prices have strengthened a little bit here as production cuts by the OPEC plus members and curtailments by U.S. producers are finally starting to have an impact on supply and on prices. However, depending on the timing and extent of the recovery, it may be some time before prices return to pre-COVID levels. In the meantime, coming out of this pandemic, we really want to see the companies we invest in focus on free cash flow and use that cash flow to pay the current distributions, and then anything that's left over to pay down debt to continue this trend we've seen recently of lower leverage. We think that would be a real positive for the industry and would be positively viewed from investors.
Okay. That's all. That sounds good. So I want to end there. I want to thank you, one, for taking a few minutes here to go through this MLP metrics piece, and I would encourage the financial advisors to go on our website and you can get the full report that you can utilize to get some even deeper insights. You can visit us at our website at www.mhinvest.com, and you can always reach my colleagues on the sales team at our home office at 845-679-9166. I would also encourage you to follow us on Twitter and LinkedIn, as we're constantly posting really good value-add materials that come directly from John and the other members of the Miller Howard portfolio management team. So John, thanks so much for doing this today, and we look forward to speaking to you soon.
Thank you.
Okay, have a good one.